Okay. Everybody here is new. It's not new, so I've seen all of you before. We are missing those of us from US and Canada that usually join a different session, but I heard some of them may be sleeping by this time. So that's why it's going to be recorded to make sure everyone is involved. So wealth management, let me check my time. Okay, we are starting now. So you know that everyone want to make money, but you need to understand a little bit of it in terms of how the structure works, what you can be in the industry. So when it comes to financial market, in fact, the retail traders is just like the least among all of them. You need to understand the basic things about the finance, who are the players, and how you can also scale in trading. Like I used to say in my previous videos, we are in this industry, we have at least uh, 5 major players. We usually have wealth managers, we have portfolio managers, like we also have fund managers, we have hedge fund, we have brokers, we have investment bankers. In fact, there are a lot of layers. Even in the financial market, there are people we call market makers. We have security trading firms. We have a lot of people who plays in this industry that also makes it more unique. And if you want to scale in trading, after learning the basics, you need to now start understanding how wealth is built, how you can be able to manage wealth. This course is also related to what we call portfolio management. So you can also learn a lot from it. And I'm not the one taking it today, so I'll be part of the student who will learn because I'm still scaling. So I become good in trading and big in trading by learning all these things. So it helps me to create a structure. One of the objective you will learn from this course is that you will learn how to create investment product. Yeah, it's very, very important. How to create like a structural trading system that could help you scale. Some of you are doing well, but you don't know how to structure it properly. And then what is wealth management? What is even managing wealth? When they say wealth, what are the instruments? What are the tools? What are the things that is involved in wealth management? Is it just looking at the chart, buying and selling and setting stop loss? Or is the financial market the one we are doing part of the wealth management ecosystem? Can you manage what with it? Or can you create something out of it? So that is all about this course. So we have our facilitator is one of our big facilitator we have in the industry. His name is Obi Nnamdi. He's a sex-sponsored individual and also a manager of GTI Security Limited. One of the, I think, is the first non-banking financial system in Nigeria. I think it should be the first. I read about it online. They're one of the biggest in Nigeria so far. So I think he's the manager of the trading floor. He will introduce himself much better than me, but he's very much experienced. He have taken our course on equity investing. He have taught us about equity investing. Those of us I want to understand proper equity, how to diversify. We have public equity, which is the normal stock where you can buy stock. We also have private equity. You can also buy shares of private companies. Then on how to analyze it and become profitable in it. We have that course. It has been posted on our YouTube before, and we are also planning to do the second layer of it for those of us that want to understand properly. So you're gonna be a little bit of practical. You have chance to ask questions and get familiar with the whole system. Also make sure you have your notes. This part is recorded. You can also have your notes so that you can take down some things you need to know. At the end, we'll give you a certificate of training on wealth management. At the end of the course, we're gonna give a certificate of training on wealth management under our trading school. I'm most likely gonna be signed by me and by our facilitator. Is that all right? So I don't know if you are free now, if you are ready to go, Dr. Namde. Good morning.
Good morning. Okay. Hi. How's everything? Good
We are
morning,
doing
everyone.
good. Oh, we are doing good. We are pushing.
Uh, it's a
Yeah,
pleasure to
we
be
are.
here.
Yeah, it's also a pleasure to have you to learn from you. We are the new generation that want to take over the non-banking system and redefine it and create things new that is different
Yeah.
from what you guys are doing there. Yeah.
Okay.
Mm.
Yeah. The one disrupting the market.
We hope so, but we want to collaborate with everyone because we have a lot to learn from you guys, from the traditional system. Yeah.
That is fine.
So yeah, I'm gonna make you the host now, so that you can take over from all of us. So welcome,
Okay.
Dr. Nandia, and you're now the host.
Thank you so much. All right. Welcome, everyone. I think it's a pleasure to be here. And once again, I I have been introduced. I don't know if there's anything more I can add to that introduction. He's done I think what everyone should do. So I just want to welcome everyone. It's We have a few minutes just to look at wealth management. I'm going to be focusing on Nigeria, but basically what we are saying is that the entire ecosystem is literally run at the same sets and standards. So you can leverage on what you know in Nigeria, and then you can also apply it to things across um, the globe from wherever you are connecting with us. I know I don't have too much time. It's about 10 here from where I'm streaming from. So I'll just quickly run through the diversity of what we are doing. Wealth management, really, what do we understand by wealth management? We are going to be looking at it from two sides. One, from people who are actually doing the wealth management, and then maybe for you or us as individuals who actually will need to realize that it's not just investing and putting money away and making profits on trades, but being able to actually look at a holistic financial planning. What does that mean? You are looking at not just what you are doing now, but essentially what is going to happen going forward. And then that's where it becomes very, very interesting because in wealth management, there are sections of investments that are actually geared towards various types of planning that you want to do. If you are doing savings because you have a target that you want to achieve something, that's one thing. If you are doing investment because you want to increase your portfolio, you want to create wealth for yourself, it's something you are going to look at. There's also a pension part of it, which is also part of wealth management because um, yes, we're all in the young generation, the Gen Zs and all of that. But as days come and go, we need to start realizing that we might not have the same kind of energy that we have right now. So we need to start thinking of that. And then one of the few things that most people don't actually realize that it's part of your wealth in terms of management is the fact that insurance, that is probably one of the most underrated part of investments that people have because they don't see it as maybe they don't see it as necessary, but they don't consider insurance as part of investment. It can actually be when it's well structured, and of course, estate. You see, there's a new trend now that we are realizing, not just even in Nigeria, because let's face it, the tax laws in Nigeria they are changing very, very fast. So people need to start realizing that we are borrowing a lot from what is happening outside Nigeria to put in play in Nigeria. And that's what is called estate planning, where people need to start realizing that there's a need for you to have what is called an estate in terms of being able to pass on what is called generational wealth across various generations. It does not have to die with you, and it does not have to be in a situation where when you leave, because we all have to go one of these days, that people will now start struggling over what you have invested over. So estate planning is also very, very essential. And bringing it back to the context of Nigeria, of course, we all know that, yeah, we have gone through quite a lot of in terms of economic downturn in this country. But let's believe it, things are going to change. We're going to start seeing a lot of improvements, whether we like it or not. We are seeing getting to a situation where you and I are realizing that investments cross across borders. So even if the Nigerian economy feels that they want to continue in their local champion-like processes and controls, you and I know that at the push of a button, we can be investing worldwide. Yes, we need to know where it's part of investment for your own wealth, but the geographical limitations have gone far beyond that one. Why wealth management and why it matters? One, personal goals, business goals. You need to start realizing that everything that you are doing must be targeted towards something. We don't just do things for the sake of doing it. You must have a goal. If you're a trader, why are you trading? There must be a reason why you are trading. If it's to make money, how much? You need to set goals and targets for everything that you are doing. It's very, very important because anything that you don't have the targets for and the ability to measure it, then how do you know if you're doing well or you're not doing well? So you must have personal achievements, personal targets, and business growth. And then when you're managing your wealth very well, it helps you to hedge against inflation and economic shocks. Because the basic difference between a wealth manager and other investment experts is the fact that they have the ability to spread your portfolio. I'm going to use that word going forward in terms of various asset classes. You are not restricted to just one kind of asset class. So the ability to manage various asset class into a portfolio for you is what will also help you against inflation, against economic shocks. Because if you are fully concentrated on the stock market or on the commodities market, if anything goes wrong there, you realize that the valuation of your portfolio goes down. But wealth management looks beyond that. You're able to take your investments across various asset classes, and that's very, very important. It provides financial independence. It keeps you going because you are at every point in time being able to revalue your portfolio. Very, very critical across those access points. You have your business goals, you have your targets, you know what you're looking at for, and you know how to go about it. So that's extremely important. And then in Nigeria, well, like I said, I'm going to be focusing, that's our base. Going through the names I'm seeing here, I'm sure most of us are, or at least close to Nigeria, and if not living in Nigeria, but at least have a good influence about, or a good knowledge of what's going on. We are one of Africa's largest economy. I think we're now number 4. I think from 1, I think we've gone down to number 4, struggling between us, South Africa, Egypt, and co. Inflation has been really, really hard for us. Virtually every investment that we have currently, very few of them are beating the inflation numbers, whether the real one or not. But we are finding it extremely difficult to beat inflation numbers. And when you're not beating inflation numbers, what that pretty means is that for every day you are holding your investment, you're actually losing because you're actually doing loss minimization as against making profit. That is why it's so important to have a wealth management portfolio whereby you diversify this risk, because you must always beat inflation. If not, it's a major challenge for us. Naira has been something that we all know has gone haywire. Thank God at least it's now a bit stable. Not that we like the value, but the stability has given you the ability to plan and make your positions known. And the most important thing for everyone in any investment outlet is this: time plays a huge role. And with a useful demography in this country, I'm sure most of us who are probably even in this course are in that use category. Maybe not in the 25s, but you have a lot of time to invest, you have a lot of time to plan, you have a lot of time to diversify your portfolio using the various asset classes that are available. So what's the landscape? Standard savings and banking products. Most people will tell you, don't leave your money in the bank. Well, under wealth management, that might be true, but at the same time, the entire plan of being a wealth manager means that you have the ability to spread your investments across various asset classes and foundations. Why do you need some of them in liquid cash, in investments, and all of those things? Because at every point in time, you and I know that there might be a need for you to actually fall back on something. And those are where, yes, you might say that the rates are not fantastic, but having some things like that in terms of savings and in terms of the banking industry also helps you not to break your investments. Because in some of the investments that we all do as wealth managers can be very long term or medium term, whereby if you break those things in between, you discover that you're actually going to be messing up your investment profile. So that's why it's also very important as a wealth manager to look at all those standard products, savings accounts, and all of those things to give you liquid access to cash. Okay. Then you now have the major investments that we all know of, whether it be in stocks. Bonds are very essential. Commodities. Most of us probably play in the commodity space. You are doing your gold, you are doing your oil, you are doing all of those things. Those are classified as commodities. Mutual funds, very, very important in terms of having that in your portfolio. Basically, what does that mean? If you cannot at your startup point have the ability to go into major investments, you can go into what is called mutual funds. Mutual funds actually pull funds together from a lot of people and then do that heavy investment. Whereby if a minimum investment of a transaction, say it's ₦1,000,000, and I do not have ₦1,000,000, I can pull several people together, raise ₦1,000,000 into that investment so I can get that return. And that's where mutual fund plays a lot of a role. It's very, very good to start your investment process via mutual funds because one, it gives you the ability to enter into very good investments at very low prices, which is extremely important. People have structured mutual funds across all asset classes, equities, real estate, you name it. You can have a mutual fund that mimics every single thing. What does that mean? If all the mutual fund is saying they're going to invest in stocks, instead of you investing on all those stocks individually by yourself, investing in a mutual fund that is an equity fund can actually invest in stocks across the entire exchange, depending on the exchange that you are in. And then you can now get the benefits of that because they are being managed so that when one stock is going down, the other one might be going up, and you always balance out your portfolio, which is extremely important. So looking at that, there's also real estate. Real estate is pretty steep in terms of entry levels. But what we are seeing also is when you're as a wealth manager, you're also looking at the fact that in real estate, if you cannot get into the real estate business itself directly by buying a house, 100 million, 200 million, you can actually buy a REIT. What that means is that you can play in what is called the real estate investment market. You can actually buy fractions of those investments. Let me try and simplify it as much as possible. Assuming there's a house for 100 million. You can't get into that house for 100 million because when you buy the house, to use it for an investment, you kind of get what we call maybe rental income, but you can get into it. The same thing, you can actually pull funds together, whereby you can invest in a REIT. A REIT is actually a real estate investment trust. So part of what that is that REIT owns the real estate, and you are now invested in a portion of it that you can afford. And then when the rent or whatever income that you're coming in from that real estate comes, you get a portion based on the proportion you have invested in. And it's very, very clear and it's managed. That's something that a lot of people need to have in their own portfolio. Because in everything we know that real estate has not been very, very exciting, not just in Nigeria recently because of all the probably attention they are getting, but worldwide, you discover that real estate is one thing that you can actually use to hedge against inflation. Also, some commodity stocks can also play that part. So the thing that you need to also be looking at is, look, as a wealth manager or somebody who wants to get into wealth management or somebody who wants to have a wealth managed portfolio, there's a need for you to have those diversification in your portfolio so that you are never stuck in one area. Pension funds, very, very important. There are PFAs who you can invest in. Have a portion of your investment across pension funds. What that actually does for you is that it gives you that ability for you to know that in everything that you are doing, there's a portion of it that can come out every month or every quarter, depending on how you structure it, going towards an investment product that will pay you over the long run. Basically, what that means is that by the time you get to the point where you feel that, look, I don't need to do all those stress, this investment will now start paying you on a regular basis, even via annuities. They are called annuities also, whereby you can get this investment returns over the rest of your life based on the type of investment annuity that you have invested in. So that's also very, very important. Insurance. Wow, very, very essential. Do you know that you can insure your returns in some investment trusts, in some investment certificates? It's called like a hedging, whereby some of you who are probably trading with Uche and Co. probably know how to do some of those things, where you hedge your funds with either gold and all of those things. You can also use insurance to do some hedging against fluctuation in your pricing, be it as a form of risk protection. Because basically what we're saying when we're doing wealth management is the fact that we're diversifying, but most importantly, we have a goal and there's a need for us to constantly improve. Targets will be set, times will be set, milestones will be reached. And if there are any risk that will stop us from doing that, that's where hedging and insurance plays a huge part. You can get some of those instruments and also hedge your transaction. Process, like I said, if you're going to get into wealth management across board, basically what are you looking at? Be it a wealth manager or even you that you want to have a well-diversified portfolio. The first thing you're going to do is probably look at yourself and say, look, where do I stand in terms of assets? What's my current status? How do I go about it? You need to know where you're beginning, okay? And then you now need to start defining what are the goals I want to achieve with this wealth management process. I want to be able to achieve X amount of valuation by the time I'm X amount of at a particular point in my life, be it long term, be it short term. Ideally, we should have a short term view and a long term view, and actually sit down and map out exactly what you want to achieve over your short term, break it down into shorter time spreads, and agree with yourself that, look, if I'm doing, say, every month a particular amount of investment, I'm expecting that with all the expertise and everything that I need, I should be hitting a particular figure at a particular date. Then, once you have those goals, you now start doing a diversified investment strategy. What do I need to do? Which of all those items I've mentioned, be it bonds, be it stocks, that I need to start investing in? And you need to have the knowledge, which is why some of these sessions are extremely important, because you get to rub minds with people and get to learn what are the trending investments, what are the pitfalls in some of these investments, and how to identify them, monitor them, and actually do those kind of investments. So you monitor your portfolio. In wealth management, unlike some of in those, well, let me say some of our older generation people, you know, there are some people when they buy some stocks, they buy it and they hold it. It's like it's almost a child or a jewelry or something that they keep forever and ever, and they're looking at it. When you are doing wealth management, to be honest, it's your goal that is what you're after, not really the industry or the institution. If an institution is not doing well, you get rid of it and rebalance your portfolio. You monitor and you move around. You can decide today to exit equities and move to commodities. You can decide, look, going forward, only 10% of my entire portfolio will be in commodities or in equities or in fixed income securities. There are so many of them. But the most important thing is have a goal, have a plan, and run towards your goal. Those goals should be sacrosanct and not the investment itself. So you can always rebalance your portfolio. And then you continue to plan. Because at the end of the day, why are we doing all of this? In order to also be comfortable, in order to also create generational wealth for ourselves. Because wealth management, especially if you are looking at transiting between yourself to your family members, your children, and your children's children down the line, as the Bible will tell us. So what are the challenges that we normally see? Literacy. thank God for programs like this. We'll continue to do that. Sorry, Uche, I don't know how long I have, so let me know exactly how to portion this.
Yeah, you have 1 hour, and we have 15 minutes to answer the question.
Okay, so there's good time. Okay, fine.
Yeah.
All right, so we just continue. So
then we may also take a quiz, because we are giving certificate, at least to be sure people understood 1 or 2 things. So I'm taking them the quiz.
Wow. Yeah. Congratulations to all of you. So no financial literacy, of course. If you don't know it, you probably make a mistake. So there's a need for you to learn and continually learn. Please, that is very, very important. One of the things that you need to also understand is the fact that there are instances where people can come up with several schemes. So understanding finance, understanding what it means in the wealth management space is extremely important, because if you are the one who is managing your portfolio, or you have gotten to the point where you are managing portfolios for everyone, the returns are key. So you need to learn. Things change every day. Regulations change. You need to know where regulations are, and you need to know how to handle it. You need to know where the inflation is going, where the currency is going, what is happening in the crypto markets, what is happening in the economy, wherever you're investing in. Extremely important. You need to know what the governments are doing, because in most cases, they shape what is going on. Policy regulators can actually enhance or derail investments. If you're in an environment where the policies are so uncertain, it can give you one advantage to do things that nobody's going to query you on, but at the same time, things like that can be shut down in midstream, and you are stuck with investment that you were not planning. It has happened severally, where people go into investments, they are doing crypto, wake up one morning and they say crypto is banned, you cannot transact anymore. And people started scampering. A lot of money and a lot of investment can be lost if regulations uncertainty is going to cause us to have those kind of issues. So it's very, very important that we are very literate in what we're doing. We understand the market in terms of what affects the valuation of your portfolio in asset management. You must be able to really understand it, because at the end of the day, the valuation of those portfolios is what actually makes a whole lot of difference. And what are the opportunities if you want to become an asset manager? One, you might look at it and say to yourselves that, look, there's so much financial challenges in Nigeria. I'm using Nigeria as an example, but let's not face it, it's cutting across everywhere. People, the unemployment rates and all of those things are extremely high across places. Countries are reducing immigrations in order to boost the economy and all of those things. But we're also seeing a rising middle class. Why am I saying this? If you look at the numbers, in terms of when people are saying to us, schemes, and all of a sudden you are hearing billions and billions of naira being raised over a short period of time to investment that we are not even sure of. And you begin to wonder, where is that money coming from? What that means is that there's money. And what that means is that for a wealth manager and investment, there's access to growth. There's access for you to be able to manage funds. You need to get to the position where you know that this class of people have these funds that they are already invested in across various asset classes. So you need to position yourself in such a way that you attract some of these things. And by constantly doing what is right and getting them the best in terms of returns, you'll be able to start growing your asset management funds in large numbers. But most importantly, there is money to be made. And there's money in this economy. And I'm sure people are probably aware of that. The good thing about it is that with all the evolutions that we have right now, tech is virtually going into every situation, every institution, especially in the wealth management space. One, what does it mean? you have the ability to invest in multiple asset classes across multiple jurisdictions from the comfort of your phone or your device. Let me just use the word device. Once you have internet connectivity on your device, and with the right access and with the right tools, you can do so much. We have seen so many fintechs come and play, and they are making quite a lot, giving people access, one, for diverse portfolios, for hedging instruments. The days of local play is over. There's nothing like local play anymore. We are now in a global environment whereby if you are not getting the right returns in one jurisdiction, in one economy, at the click of a button, you can shift your wealth, you can shift your assets and your portfolios into another economy. You can do straight online trading, and you can have money managers, experienced professionals who can guide you and also in some cases actually do the investment for you. Tech has become something very, very essential in our business and in our wealth promotion. So you have that ability to do a lot using tech, and there's money to be made. People are sending in money. If you take the case of us in Nigeria, remittances is fueling a lot in terms of investment. There are people right now whose job are to manage wealth for Nigerians in diaspora, and a lot is coming in. The rally we are seeing in the real estate sector is primarily from this kind of investments, and they are real. And there are so many new ways in which we can manage. There are alternatives for us to use in terms of managing wealth and all the things that we need to ensure that we make the best out of it. So in general, wealth management has huge opportunities, both for those, because from what I'm getting, for those of us who want to get into it as wealth managers, and for those of us who need to use those services to improve our wealth. It is a very, very traditional in some cases, but tech-driven also in other cases where we're seeing a lot of things happening over in that space. So, but for individuals, how do you manage your wealth? How do you get into wealth management? Consistency in every investment is the key. If you know you want to grow your wealth, like I said, the first things you're going to be looking at is, one, what is my short-term goals? What are my long-term goals? What are the milestones I need to achieve? Straight off, no holds barred. Look, it's something very serious, very, very important. And you do it consistently. If you are deciding that you are going to be growing your wealth at a certain percentage, that will require you to set aside some certain funds over a period, be consistent with it. Let your investment be your first mover for every money or every income that comes into you. Plan, plan, plan. Budget it and stick with it. Very, very important. Multiple asset class diversification. You cannot put, like they say, all your eggs in one basket. You must be in the position to put it across many asset classes so that if there's any issue on one asset class, it will not affect the other one. The whole idea is you need to constantly grow so that when there's a need, rebalance your portfolio, shift things around. Today, you can say to yourself, look, I'm doing 30% equities, 30% commodities, and the rest in fixed income. Tomorrow, if equities are doing very well, you can reduce equities to 10% and reclassify to the other ones. The most important thing is never let one single sector be the determinant of how well or how not well your portfolio is doing. Plan for short term, plan for long term. Have those goals in mind. And most importantly, look, Nigeria is evolving. So for those of us who are in Nigeria, and for those of us who are in other climes where the tax policies are already very well established, we are getting there. In investment these days, you cannot walk away from the fact that a time is coming when you will need to start looking at how to pay taxes on your investment. So you need to start planning it very, very well, be it in terms of an estate, be it in terms of a trust. There are several things that you need to look at, because just like the way they will tell you, if you are in business, separate your business from your personal account so that the business will know what the income of the business is, and we know what your inflows for your personal account is. Because the way it's going to happen now, especially from 2026, when fully the new tax laws in Nigeria takes effect, if you are somebody who people are throwing money into your account, by the time the tax people go through your bank statements and see millions and millions, which might not even be your money, they will tax you on that. So it's very, very critical that as you are growing your wealth, as you are managing your wealth, you are also looking at the tax implications of the kind of decisions that you are taking, the tax implications of the structure that you are using to go into those investments. You can have a trust. You can have the other investment vehicles that you can use, where the investment literally becomes its own personality, separate from you. But most importantly, why some of those things are very, very important, especially when you are doing your wealth management, is the fact that for transition purpose, it saves a lot of duties and penalties and payments and fees and all of those things. Then you need to go to court. All you need to do is just to change the trustees, and the trust continues. It's not as simple as it sounds, but it's something that anyone who is looking into going into full wealth management should also take that into consideration. As you are building your wealth, you need to look at the regulations and the tax implications of it and structure it in such a way that you get the best of both worlds. Because there's no point doing so much and I know it's being recorded, so I'll be very careful with my words. And because you are supposed to be a good citizen, you're supposed to pay your tax, but at the same time, if you structure it very well, you can get even the benefits of the tax regime in the environment that you're found in. Please use as professionals, learn from professionals, get advice from professionals. The learning, I agree, is also our individual responsibilities, especially if we are managing wealth for people and are managing for ourselves. But there are people who have gone down this road who can help you. There are asset management companies, institutions, various of them. Please make sure that they are registered people within the jurisdiction where you are. Going to SEC websites can always give you a list of very qualified and very solid, good professionals in this space. Always use good professionals. Even if it costs you a little bit of money, it is always better in the long run because it also helps you to achieve what you want to achieve. So what are the cases examples? One, like I said, fintechs are playing a huge role. The good thing about fintechs is the fact that it gives you the ability to switch immediately. One of the things that we are seeing is, and one of the benefits of them is the fact that, look, they have made it so easy for you to make these investments. They've given you so much in terms of resources. And most importantly, you have the ability to switch as very seamlessly. You can open a tech account in 1 minute. And the same way you get in, you can get out. But please always be very careful. Make sure the institutions that you're using are regulated in the environment that they find themselves in. That gives just a little bit of credibility. Investments can go up and they can go down. We don't have a problem with that. But we have a problem where we are defrauded because the institution is a bad institution. So that needs to be looked at. And traditionally, especially for wealth management, there are SEC-regulated institutions called asset management companies. They are the traditional, the professionals, they are regulated. Several of them across the world, Nigeria, they are top ones that you can use. This is not a position to commend anyone. You can do your homework. Most of them are actually ideal, especially when you are starting off, because you can actually leverage on their wealth of experience. Most of them will give you research reports on where you're focusing. If you're focusing on commodities, on gold, on oil, and those kind of things, you can get information from all of these asset management companies. And of course, the back end of the fact that they're regulated. Regulated means in the sense that somebody is always looking into their books, so that when they say they are doing this, somebody is here to say, yes, I can say yes, that they are doing that. So at least, even if the investment does not return the kind of profit that it's supposed to, it is not because the guys were fraudulent, it was just because many bad decisions, economic downturns and things like that, as they are coming to play. And then there are also non-traditional examples. We're seeing a lot of real estate investments. Agric started booming for a while. It tapered down in a bit, but I honestly do believe that agric is something that if it's well structured and managed, if you find a good agric investment, it's something that you need to have in your portfolio. It's very, very good. One, it's who eats, whether we like it or not. So, but the risk can be extremely high, and then maybe the returns might not be as high in compensation for the risk. But it's always something good to have in your portfolio, because that diversification can also come in terms of what we're doing. So what are the outlooks going forward? One, we're going to see more digital platforms. There's this concept that is evolving, and they're calling it open banking or open finance. Some use the word DeFi. Basically, what that is doing is that you are taking your investments away from the institutions and you are holding it by yourself, in quotes. When we have the concept of open banking, it has actually been approved by the CBN in Nigeria. It means that you can have access to all the banking investments in Nigeria from a single platform. You don't have to be in one platform. Like if I need an investment in GTB, I have to go to GTB platform. If I need an investment for Zenith, I go to Zenith platform. With open banking, what that means is that I can have one platform and have access to multiple investments across the board. What does that mean? It gives me the ability to see everybody's investments. Somebody will tell me I have an investment for 90 days, that will give me 10%. Somebody will tell me I can do 12%, I can do 5%. You have the choice because digital platforms are expanding. So as a manager of wealth, you can actually move your investments across these things very, very easily. That is evolving, and we're seeing it happen. Regulation is also, they are catching up, to be honest. They are getting more in tune. We have gone from the fact that crypto must never be done. Digital assets is wrong. Now, SEC has brought out rules for digital assets. So they are improving. And the whole idea of it is to make sure that there's a need to regulate some of these things, to give you and I, who are wealth managers, the comfort to play in this space. Okay? And then the focus of it, like I said, as you continually invest, the investment will yield the return that you want, and you can now position those investments for generations. There is no reason why anybody here should not leave an inheritance for themselves and their children's children, depending on the your religious inclination. I'm sure there's a quote in the Holy Book that talks about that, leaving the wealth to your next generation. So those are the kind of things that we're seeing. It's becoming easier to manage. Information is becoming very, very accessible, and we're able to do a lot more in terms of regulation is getting stronger to help protect us in our investments, and we're able to start making serious impact, not just for ourselves, but across generations. So for us, in conclusion for this little process, the path to financial freedom, you have to be in wealth management. There are a lot of opportunities to expand, not just in Nigeria, but across the world. But the most important thing for everyone is to take that step, plan, protect, and grow. Thank you very much for your time. I hope I have been able to communicate a few things. Thank you.
Thank you, sir.
Thank you, sir. I wanted to ask a question.
Please go ahead, sir. I'll take all the questions now. But it's going to be, how do I call it, interactive. So
Yeah, so now, basically, wealth management is all about the step to become a wealth manager is to identify the market, your niche, the area you want to manage your wealth. Then, and they are planned towards that in the sense that you need to identify the product you want to diversify into. Basically, now we have learned that you can manage wealth on different assets. So you can choose to diversify it into building a trust. It can, and that trust could be like maybe real estate management trust. It could be derivative investment trust. It could be agro product trust. It could be fintech. It could be any type of trust where you have already identified a niche. Like those of us that have been able to build something, develop a strategy. This is the process of scaling it up. Then you now draft your operational process and the things that involve into making it a reality for another person to see it as an opportunity. Now, my question will come from, let me be the first to ask the question, Dr. Nnamdi. Now, what are the process in setting up a wealth management portfolio?
okay, clarification. A
Now,
wealth
I've
management
known
portfolio for you as an individual, or you want to set up a wealth management structure that can help people manage their wealth.
No,
Two
for me
different things.
as a company, or for me wanting to start a company, because basically almost all
Okay.
of us here are on one way or the other involved in financial market, either as an individual retailer or as a corporate retailer. So now you want to create a wealth management system for others. What are the steps? Let's maybe number 3 step to be taken before scaling.
Thank you. Okay, before to do that, to set up a wealth management institution, okay, the first thing you are going to have, the minimum you're going to have, are 3 basic individuals in your team. You're going to have the fund manager, you're going to have the investment manager, and you're going to have a compliance person. So you need people who will manage the funds, because there are 2 sides of it, the assets and the liability side of it, and then the compliance. And all of these people, depending on the jurisdiction that you are in, I'm going to use Nigeria as an example, you are going to be what is called a SEC-sponsored individual. So when you have like somebody who can be like the MD, fund manager, and the compliance person, that's the minimum you can have. Then you now need to go to SEC and apply for a license. There are various licenses you can apply for. You can apply for a full asset management license that cuts across all of this. You can apply for a fund manager's license. And there are other several licenses. And those licenses have different criteria, but basically in all of them, those 3 individuals that I mentioned must be as part of that system, minimum. Every other thing that you require, you can. Hello, I hope you can hear me.
We can hear you clearly.
Yes, sir.
Yes, sir.
Yeah, okay. Every other thing that you can, all right. Every other thing you require can be outsourced, your IT, your finance, and all of those things. So when you do that, it's always very important as an asset manager to have what is called a 2-pronged portfolio, or in some cases 3. 1, you can have a portfolio management section where individuals can come in and say to you, look, I have X amount of naira or dollar, whatever it is, manage it for me. And you agree and you do that management. That's 1. The next major one that you also will require is what we call a fund. Basically, what that means is that people can come in and give you money, and you will now take those funds and invest it in various assets. But the challenge with that is that for all of those funds, those funds must be registered. And when you are registering that fund, you need to tell both SEC and the people investing what that fund is supposed to achieve in terms of a perspective. I'll give a quick example. If you are saying, I want to create a wealth fund for equities, what that means is that people can invest in it, but that the investment will not do anything outside problem. And then the last one, which also you can also do as a wealth manager, is basically what we call the fixed income, where you take money for a rate and invest in treasury bills, in corporate bonds, and all of those things. So if you want to set out as an institution, you can have those basic things put in place. Now you can actually now decide to say to yourself, look, I want to be a specialist in any of them, and create your institution to do that. That is allowed. But for each of them, the minimum you must have are 3 sponsored individuals, like I said, and that is extremely important.
Now, on your balance sheet, how do you allocate the investment product of your client? For example, now you have created a market, you have found a market, then you have created a product for that market.
Yes.
How do you allocate each unit to make sure that people who invested through you, you're managing the asset, like the returns are properly allocated? Properly allocated and properly sold to them too.
Brilliant. That is why if you're in a regulated market, one, you're going to have what is called your compliance officer. And in most cases, as a management company, you're going to have what is called a custodian. That's something outside you. What that does for you is that the funds and the assets are kept in custody. You are just the manager. Now, when you create, I'll take an example of a fund. When you create a fund, okay, there's what is called a prospectus for that fund, which will be approved. In that prospectus for the fund, you have to detail exactly the asset allocation process. You can put a range, but you must be detailed in terms of the allocation of those assets. So that when an investor comes in, he can look at that prospectus and say, yes, my investment is going to go into 1, 2, 3, 4 in these ratios. And if for any reason those ratios need to change, you need to come back and inform everybody and get it realigned. So for a secured and regulated entity that you want to be, for every investment that you are doing, there's what is called a prospectus. And in that prospectus, it must be detailed up to the last naira what those investments are going to be. We all know that in this market, things change, but you are obligated to return back and say, look, market has changed. I need to reposition these assets. And then agreements are reached, and then you do. If you do it by yourself without coming back, there's a penalty for it. But that is where the regulation, and you know some firms might not want that straight jacket, and they do. Well, I would not say they're now writing their prospectus in the sense that, look, you are giving me the permission to play in this space, and I can, move around. For those who, even SEC will tell you, you cannot sell those kind of products to certain people. They will tell you that it's only what they call informed investors, that they will in a way your rights to the portfolio manager. So we have those kind of investments that can move very fast and very quickly. But like SEC will say, only informed investors are allowed to invest in those transactions. And the last time I checked, for you to qualify, I think the minimum is about 5 million upwards. So the minimum you can invest in such a fund is 5 million. So to answer your question, there is a prospectus that details how and where, even to the ratios that you take customers' money and investing.
Okay, so perfect. So,
I hope you got that.
yeah, perfect. So I ask this question not just on my behalf, then on behalf of others. So we'll take more question now from the floor, then before we go into our quiz. So we still have a little bit of time. So if you want to ask a question, either you raise your hand and ask it, or if you're in the office, you could type it as soon as possible. You could have even start typing it anyway. So I could be able to read it out to the audience, and our facilitator will be able to answer that. Is that all right? Can you hear me? Yeah, so do you have a question? Yeah. Mm. Okay. I think there's no question yet, right?
I have a question, sir.
Oh, okay, go ahead.
Sorry, I was actually looking for a way to raise my hand. I was looking around the thing. You're welcome, sir. Where my question is mostly on how to pull such people for funds on visual funds. Because I know in Nigeria, it's quite difficult for anything that has to do with visual for Nigeria to be convinced to pull a fund for such businesses. So I want to know, how do you do it in Nigeria?
Um, okay, thank you. Let me make sure I understood. You said visual funds.
Yes.
Mutual.
So that's the mutual fund.
Oh, mutual funds. Okay, how do you do mutual funds? Okay.
Yes.
It's not, I will not say it's that easy, because one, you are competing with the cryptos of this world, the MMM this world. They will give you money today, come back tomorrow and collect 200%. I don't know, people still spend a lot of money in that. What we have done over the period is, one, to show consistent growth. And all those mutual funds specialized and do things that people's attention. I'll give you an example. It's called the Nigerian Football Fund. You are invested in Nigerian football. That attracts people because of their love for football. So now you have created a specialized product that people are relating with. You need to do your studies, because when you are doing a fund, you need to do a fund that, one, will speak to people, which is one thing. But even though he's speaking to me, or I might like football, but I also want to return. So you use the pro and grow. That has always worked. So identify the niche that you want to attract, create the product, the fund products for that niche, and then ensure that you give them the quality returns that go with it. Thank you, man.
Okay, perfect. So do you have another question?
Okay.
Yes, sir. My next question is, because when you create such products, because in Nigeria, I was once a shareholder of a crypto company like that. It was doing well in Port Harcourt. They had so many of it. I don't want to mention them. They were doing very well. But in Nigeria, they have this sense of when a business is doing well and a company is against it, you can just see EFCC, even when it's registered, shut down the office. So you as a shareholder, you're not there like to struggle for your own money. You're there to like replenish those that have invested in that office. And you're like, there's a lot of corruption that is holding back a lot of things to be done in Nigeria. So how do you avoid that?
You have stated what everyone can say is one of the major challenges of doing business in Nigeria. It's something that, in all honesty, is work in progress. But one of the things that you can do, and most institutions need to do, is one, like the one where I play in, you need to have what is called a self-regulating association, whereby all of you will come together and create a sustainable force and have those conversations, not just with regulators, but also with lawmakers and everyone. If you go it alone, there's a tendency for people to crush you, so to speak. But when you are in these associations, it helps. Because one, before they want to touch you, they know that there's a whole group of excuse me, an association backing you. We have seen that help a lot, especially with regulators, where regulators can wake up and take some decisions. But when they realize that there's a strong association of maybe those people in your business, what we are seeing now is that even before the regulations come out, they share it with you and say, what do you think? But if you were alone, they would never have done that. So what I always advise is, if you're in any sector, be part of it and make sure that that association is strong. That is the only way that you can help to counter some of these things. What you've just said, do they occur? Oh, they do, severally. People have been punished. People have been stressed out over through no fault of theirs, and their businesses have gone under. But I have seen situations where the associations will also come to play and back those things, provided that you are doing what you're supposed to do. That makes it a lot easier. So my own suggestion is, in whatever industry and whatever sector you have found yourself in, especially as one of these players, join. If you don't have one, bring people together, join, create the association, have it registered. I'll always have communications with the regulators and every one of them, attend their seminars, let them know that you exist. And you discover that when they even want to take some decisions, they will call you and ask.
Okay, so can we take another question, please? Just one more question.
Hello, good morning, everyone.
Good morning.
I have a question, sir. Please, you are making reference to the area of trust. I don't know if you can throw more light on trust, in issue of trust and tax. Is something you're trying to bring out there. I don't know if you can throw more light on it.
Okay, thank you very much. Let's look at it this way. If I own a property today, okay, and it happens, I pass on, that property there are duties and taxes that will be paid on that property before my beneficiaries can get it. That is it. And those court duties, all of those things, add months. It's a whole lot of process, even when there is a will. Now, what we are saying is what is called a trust. So basically what that means is that if I own a property, the property will be in the name of the trust, XYZ Trust, managed by any trustees. So what that means is that the assets are owned by the trust. I am just a trustee. My wife will be another trustee. My children will be another trustee. If anything happens to one of the trustees, the other trustees will just bring somebody else. So the trust is a living trust. It never dies. So if there's no debts and all of those things, all those kind of taxes will not apply. and the trust can decide what to do with the assets under that trust. That is just one aspect. But the whole idea is that in investment these days, you need to also start thinking of the kind of liabilities those investments will lead. And there are plans. You can ask around, you can study to help you manage those expenses, because those expenses will crystallize one day or the other. So I just use the living trust as an, you can have the assets in the name of the trust, and you are the one that controls the trust anyway, so it's you. So that is what we're saying. So there are other vehicles that help people manage their wealth, especially when you are thinking of what's called the cross-generational wealth, wealth that will go from you to your children and to your children's children. They need to have those kind of things that will manage their expenses. You have bequeathing a whole house to a child. In Nigeria, it's probably not happening, but we are seeing those tax laws change, and we are seeing them happening very, very soon. But in other climes, if you give a house to a child, the child will pay duty on the value of that property. But if that property is in a trust, and you just make the child a trustee, it just continues. So those are the kind of examples. There are other examples and other products that are, by the time you do your investigation, you can choose the one that best suits your investment horizon. Thank you, sir.
Okay. Quick one. What kind of wealth management structure can be suitable for online forex, crypto market, commodity market? What kind of wealth management structure is suitable for it?
A tough question. Okay, tough question, because you cannot have one size fits all. Okay, so you can have several, but two things come to play. I hope you can hear me.
Yeah, I can hear you.
Okay, yeah, two things come to play. You need to take a look at online trading and all of those things. Who is doing the trading? How is the structure managed? If it's, let me pull the funds together and give it to a solid trader who will now trade and give returns, yes, then basically in quotes, you are looking at having a fund structure. So basically what that means is that people come in, they put in money together, it grows. If you have raised $10,000, $20,000, $100,000, that $100,000 is put and is being traded, and as returns are coming in, there are valuation methods that will now determine what gets back to the investor. So the investor is not really interested in how you trade, but the valuation that is coming on a weekly or a monthly basis, depending on that. So that's a structure. But if you feel that, look, the person wants to have greater control, you can do a portfolio management setup for the person, whereby somebody comes with, one person comes with 100,000 and say, look, this is $100,000. Go and invest it for me. For that one, it becomes personalized. So you can create a portfolio management for that person, whereby you give the person the weekly reports or monthly reports, depending on, or quarterly, depending on what you've agreed. And the person can tell you, this $100,000 I'm giving you is for a period of 1 year. Whereas in the funds are usually valued, say, every quarter. So if you can stay in 1 quarter, get your valuation, go in and go out. The managed portfolio one, the tenors are usually longer, the values are usually higher, and it's usually a one-on-one personalized thing. So for asset management and fund management, to be honest, it's you can't have one size fits all. So it depends on the class of clientele base, their expectations, their involvement. If they want to be very involved, then they have to be portfolio management. But if they say, look, I trust you, here's my little change, turn it around for me. It's more like a fund. So you should be in a position as a fund manager to meet the needs of the customer and then have the skill sets to agree on what to do. It can become you can even do a straight fixed. Listen, I give you $100,000. You're promising me that 365 days, I'm going to get 10%. That's the type of portfolio management you can do. So play in the space where you have these options, you can handle these options, and then you understand your customer so you know exactly which of the buckets you can push them in. So if I were a fund manager, I would just say, I have 1, 2, 3. These are the features, these are the characteristics. Which one do you think best fits? The man might say, take my money, put some in here, put some in here, so that you can enjoy the benefits of all of them. Or you can decide to just take one of the buckets. So no one size fits all. That's why you are the investment manager. That's why you need to sit with your clients, talk to your clients, but most importantly, have the structure to meet the needs of the clients and as they want. Don't make it too generic so you don't end up pushing yourself all over the place. Have structured. If it's 5 types of products, have 5. If it's 3, have 3. If it's 2, have 2. Let the customer now decide, look, I want to be in this, I want to be in this.
Okay, perfect. So now we are closing in 10 minutes. So let us take a little bit of peace to be sure we've been able to understand how wealth management is. So this is the basics of wealth management. And we're going to have second class of it, the advanced wealth management, like step-by-step layer of how to become a wealth manager. On that note, we'll be able to give ourselves a task where we have to draw a plan, a wealth management investment structure. So you go and we draw a demo plan that is presentable and scalable on investment on different projects. So we could use any of the products we have available in the market that we have available to. For example, I am developing a real estate investment trust already. We also is working with recently now. Currently, we work with different brokers that offer different services, including the sports market. We have access to it. We have access to equity market. Most of us have access to normal forex and derivative market. So we go and we will create a wealth management structure on it. That is our second class, which will be announced probably by next week to make sure that you cover a lot about wealth management to the point of getting started. So let us take a piece for like 4 minutes. Well, first of all, let me start by asking the general question now. So can someone just summarize what he or she understood as wealth management?
For my base of understanding, sir, is getting money from people and helping them to invest it in assets that will benefit them, either in long term or short term.
Perfect. That is wealth management. Getting money from people, I like that word. Putting it to where that will benefit them, either in a short time and long time. Then second question, what are the things that you must do? That's a must. The necessary step you must do to become or in a wealth management process, like the initial step, on the initial stage, sorry.
I think he talked about
it's not just you. Anyone can answer the question, but go ahead.
Can I answer that?
Okay, you can.
The first thing you can do is to be regulated and also make sure that you are being registered like Nigeria now. The most important regulated the most important department you can regulate yourself with when it comes to financial institution is SEC. So
okay, perfect. So who else? Because I have a different answer to that.
What you do is to regulate yourself.
Okay.
And I think apart from being regulated, which is I would say the most important thing, you also need to have a fund manager. You also need to have a compliance officer. And then I think there is one other one, I forgot. There are 3 main important people actually that need to be.
Investment manager.
Investment
Okay,
manager.
perfect. Yeah. So for me, my own answer is that I first of all find the market. That's the first thing I must do. I first of all find the area I want to invest. Then through my research or whatever, if I find that market, then I will not create a company and create a product for it. That's for me. All of us are correct. Do you understand? I first of all find the market, the product where the business is booming. Then I will now create a structure which now involve setting up a company, setting up a governance and getting regulation if it's needed. It's not in all wealth management system that requires regulation. I think I should be correct, Dr. Namde. Is it in all wealth management that require regulation? In all stages? Most likely it's busy. So now, my number 3 question is this, and I'm sure that everyone should be able to answer that. What are the products involved in wealth management? Are the most important products or common product?
Real estate.
Okay, somebody said mutual fund and real estate. Okay,
I think okay.
Bond shares. But you can also manage wealth in equity market like private equities on other businesses.
Sorry, Mr. Uche, I would have loved to get a little knowledge about the aspect of real estate, not just buying of property, but if you are not strong enough to buy a property, but investing in their share kind of.
Yeah, so to set up a real estate, there are major category to do. You can get it. The easiest way is to incorporate as a real estate agent or a real estate consultant. 2, you find the niche that the real estate market, for example, abroad, like people in UK, Canada, I think, let's say UK, Canada. I don't really know much about the United States real estate. Share rent to rent, and the service accommodation system is now like a very growing part of real estate. It's becoming liquid. So you may be able to find that niche and discover that there's a very much demand on that. Then it can create the market where you become a consultant. Now create a structure. That structure is what makes it to be a product where a third party will look at it and understand what you are doing. So now the person can invest into it, and the consultant can help to manage that investment. You could create like a rent-to-rent market or a share house market where you guys source out a deal. Like a deal is a property, and they put it on a shared house or rent-to-rent, or you can put it on a short let. There's a high demand in it. Do you understand? So this course is to give you a foundation on how to create it first, like a foundation on how to create it. So that will be our first layer. Now, creating the one, you will need a financial planning or a financial planner to give a financial planner, in the sense that it will be properly, let's use real estate, for example. You will be able to get the value of that property. If it's a rent to rent, it means that you rent it out from the original owner and now restructure it in another unit. Will become like an investment unit. It could be like 3-bedroom apartment, you have taken, including a sitting room. So we can restructure it to that sitting room now become 4-bedroom apartment because it's on rent to rent. Then you now refurbish it, do all the costing through a financial planner. A real estate financial planner knows everything, and now you now estimate it into the market, because based on the market underlying values, what is applicable. Then from there, you'll be able to see the potential return per month, per quarter, per annum. And then now an investor can see it. Even your friend cannot see it. Wow, okay, this house costs maybe $8,000 per annum, and the furnishing and everything is maybe $2,000, making a total of $10,000. And the rental income is maybe $1,500. So that means per annum, we're going to make $15,000. So now it's a work of financial planner to plan it properly, because those must be accurate. Then, okay, so okay, I don't know who asked the question. I don't know your name because your name is not showing here. Okay, Morningstar. So Morningstar now.
Emmanuel.
So, okay, Emmanuel. So now Morningstar, the investors have now seen that, okay, this is a real estate portfolio worth 10,000, and estimated annual return is maybe 50%, which is 15,000. That I'm gonna make 15,000 return. Then you have created a value, you have created a system, you have created an insight, you have created a product. So the person will go in. Then the consumers will see that way. When the consumers see it in the market, the consumer will now be able to say, okay, this is rent to rent, these are things involved, this involved, this involved, this involved. Okay, it's 1,500 a good day for me. Then the person will pay. Then he have created a market that's also liquid. So that is how to create a real estate investment product. That is a lower version. The same way you graduate in creating a bigger version in terms of, like, when you come to big cities, see a lot of big houses, ask yourself, who is managing these things? So they have those people that have millions of properties, property worth millions, and those property have thousands or hundreds of owners inside them. So you as a wealth manager can allocate it. It's actually a very big work that you will still have to learn more concerning it, and all of you can be able to do like an assignment to draft out an investment product. Similarly with trading, it's also the same thing. How you be able to create a trading product, analyze your risk, analyze the return, analyze the potential areas where you're going to invest the money, how you're going to execute it. So that the other person will be able to see it through you and not be able to invest. Unfortunately, brokerage does not really give that aspect, because brokerage always act like a middleman, which is like the common body among traders. So people who are wealth managers, portfolio managers, and hedge fund, they're not really common to us. I don't know why, but maybe because of what Dr. Namdi said, some of them are designed for high net worth individual. They don't really go public like that, but brokers goes public, and they don't give financial plan, don't give financial structure. Everybody struggle to develop himself. Now, this is where we end for now, so that we can go back to work. I think you all got value for this, right? So for the people that want a certificate, let us know your name. Those of you that join us without being our student, I don't think we'll forgive you. To be honest, we felt very much violated to that, because I see some names there. I didn't blame Dr. Namdi because he allowed them in. He didn't have the list, but it does not make sense if you join our product where we are discussing something and you're not our student, and we didn't call for free training and you have to join. It's a serious violation. There are some things I don't do. I mean, to be honest. So I'm a business person. So if you know that you don't want to, maybe I don't even know why you're here in the first place. I mean, to be honest, I don't know why you should be here. I don't know why you should be here. Okay, so thank you so much, everyone, and I will end it here. I hope you got value. I need to get the feedback before I close it. Did you get value for this class?
Value.
Yes.
Thank you so much.
Yes.
Okay,
Yes, sir.
so that means we should proceed to the second level of it, right?
Yes,
Yes,
of
sir.
course.
But sir, after this, are we doing data analysis too?
It's not today. We're not doing data analysis. It's also a different course. Yeah, we'll do
Okay,
that one as
okay.
well.
Okay.
Yes,
Okay, perfect.
I'm actually waiting for that course.
Okay. Yeah, we'll call up it again. I will discuss with the data analysis engineer we have to come the day he'll be free to come and facilitate it, because I'm not the one teaching it.
Okay. Okay.
Mm.
Thank you, sir.
So do have a lovely working day, all of you. Thank you so much. Yeah.
Thank you, sir.
Thank you.
Bye.
Thank you, sir.
Bye bye.